Hi, Tim Biggam from Money Block back again this week, and it looks like we have a battleground being drawn here right around the 1500 level on the S&P 500. Has tried a couple times to break through that level with some conviction, has been met with selling. We're hovering right around that level as I speak here, so I think we're going to see this yin and yang probably the rest of this week until we get some more clarity, first from the Fed and also the jobs report on Friday. Earnings coming out okay, certainly revenues and earnings up slightly, although less than what was expected about a month ago. So given this straight up sort of rally that we've seen, we'd been up 8 straight days until yesterday. We finally had a little bit of sell-off. Transports have been up 12 straight days coming into today, something we really have not seen in about 35 years. So certainly this just up, not with up big days, but just up every day. At some point, I think will temper. Probably be healthy for the market, in my opinion, to have a little pullback here, some sort of correction. Trees do not grow the sky forever. The market doesn't go up every day. And certainly with implied volatilities off the lows, but still hovering near the lows, I still favor buying some longer term puts, selling front month puts just to position for that pullback. I have a little trouble getting aggressively long up here. I'd rather be, a buyer on a dip, maybe a 3 to 5% pullback, somewhere around, the midpoint of the January range here where I become interested. Some stocks of note, certainly Netflix is one that had just an explosive move after earnings last week. The stock has pulled back a little bit here, trading around that 160 level, only up about 60 some from where it was pre-earnings. Both the revenues and earnings were decent, although again, I think short squeeze deluxe. And when you look at some of the stocks that have been the big movers, it's more the short squeeze that we're seeing here versus the meaningful buying. So I think going forward, caution still reigns. The transports, I think, are my favorite short here. We talked about FedEx last time. It has gone higher since then. I still favor buying some Marches, selling some Februaries, doing a trade there just to position for a 1 or 2 day pullback. And until further notice, probably a little bit guardedly bearish here on the entire market. We have Amazon after the bell as well. Real nice skew trade that I'm putting on there, buying the regular monthly February 255 puts, selling the weekly February 255 puts, paying about $1.80 here. Stock last I looked was trading in the high 260, so looking for a slightly bearish move post earnings. 255 level would be ideal come this Friday. In the meantime, playing about a 48-point vol skew differential here, so I'm kind of rewarded for selling those front months, hedging by buying the regular February option. So we'll see what comes of this 1500 level until next week, or next time. In this case, I'll be off for the next 2 weeks in sunny Florida. This is Tim Biggam. As always, position size accordingly. Keep those stops in place. Thanks.